And we are live. Good evening, everyone. The stock market, well, the Dow Jones, was down almost 3,000 points today. And this is after the Fed came out yesterday and made an emergency rate cut, basically brought rates down to 0%. They also announced last week that they would be injecting in total $4.5 trillion into the banking system. Yes, you heard me correctly. In total, when you look at all of the different programs, the different repo terms that they've agreed to, we're talking about $4.5 trillion. Now, the two images that you see flashing across your screen, one of them is an article. It's an article that was inside of the Bitcoin Genesis block that was embedded by Satoshi Nakamoto. And Bitcoin was birthed out of the financial crisis, the Great Recession of 2008, because people wanted an alternative to the madness that was happening inside of the banking system. And then the other image you see is a book that I encourage a lot of you guys to go out and read by the name of The Creature from Jekyll Island. Because what's going to happen over the coming weeks and months is a lot of companies are going to go bankrupt and they're going to need to be bailed out. And they're going to try to blame it on what's happening with this virus. But the reality is the economy was already starting to tank before this virus hit. This is just going to be an excuse known as problem, reaction, solution. See, what a lot of these companies do, and they've been doing this going back to the savings and loan crisis, going back to the dot-com bubble, and going back to the real estate bubble that we had, is that companies, they take on excessive amounts of risk because they know the federal government is going to bail them out. And right now they're floating the idea of bailing out the airline industry. Now understand, this is the same airline industry that instead of saving money for a rainy day and putting money away and getting prepared, no, what they did was they focused on buying back the stock. And you see so many of these companies getting into trouble because it doesn't make sense for a business, a well-ran and well-functioned business, to over-lever themselves to the point where if you have a little bit of a slowdown, that literally it throws the entire company in a tailspin. But see, what happens is many of these CEOs, they don't want to pay fair wages. They don't want to hire people. They want to automate and ship jobs overseas and then buy back stock to enrich themselves. And I'm going to highlight that for you. See, a lot of you are coming on to my page and various other people's pages, and you're saying, oh, well, look, gold isn't going up and Bitcoin isn't going up. See, you don't know what you're talking about. Guys, you don't invest for economic downturns based upon what's happening day by day. You invest with the idea of understanding first, you're going to get the deflation. That's called the reaction. To then make the Fed come in, to then make the government step in and do bailouts. That's the whole purpose. You get the deflation first, and then you get the inflation. The same thing happened during the dot-com bubble. The same thing happened during the real estate bubble, and the same thing's going to happen again. Donald Trump just came out and stated that they're looking at a $750 billion stimulus package. Where do you think that money's going to come from? They're going to print that out of thin air. They just announced that they're talking about rolling back the payroll tax. Where do you think that's going to come from? Right? It's going to come from inflation, i.e. you, the taxpayer. So you're going to pay twice. They're going to increase your taxes, and then your purchasing power, you're going to lose purchasing power in your dollar. When the Fed injects $4.5 trillion, where do you think that comes from? But see, understand that, I can sit up here and say this confidently because I want to share a story with you. I remember being a freshman in college. It was the fall of 2008, and I was sitting in my locker room, and I didn't know anything about a recession. I didn't know anything about the Federal Reserve, but the Bloomberg news station was on, and they were talking about how we were losing hundreds of thousands of jobs every single month, and I was so intrigued. Now, mind you, we just had one of the hardest practices that I've ever been through in my life, and at that time, I was like, man, this basketball stuff is much harder than I thought it was. And I remember when I started really doing the research, and it amazed me when I really start studying this stuff. And I'll never forget, I was sitting at the table, and one of my teammates, he was a senior who graduated the previous year, and he had a job working at Lehman Brothers. And he was sitting at the table, and they were talking about how he has, he's doing good, and I need to stop focusing on these pyramid scheme businesses, and I need to be like him and focus on getting a job at an investment bank. And about a week later, he lost his job at the investment bank. And you know what happened? We saw Cash for Clunkers, we saw TARP, we saw TAUF. And I remember sitting there and saying, damn, looking back, I wish I could have brought AIG when it was pennies on the dollar. I wish I could have brought Fannie Mae and Freddie Mac when it was pennies on the dollar. I wish I could have purchased Bank of America when it was pennies on the dollar. But I was a college student. I was broke. And here we are now, 12 years later, and you have the opportunity of a lifetime when you're looking at the crypto market, when you're looking at certain stocks. You know what's going to happen. They're going to print trillions of dollars, and they're going to bail out these companies, just like they did with the automakers, just like they did with the banks. They're going to do the same thing again. The only difference is, instead of bailing out the automakers this time, they're going to bail out everyone. And when you look at the actual demand for gold and silver, and you go to APMEX, JM Bullion, and many of the gold bullion dealers, you will see that they are having record amounts of demand. See, when you look at the spot price, that's just people getting liquidated. I don't focus on the spot price. I focus on the actual physical demand. Guys, I've been here, I've done that, and I'm going to break that down to you today, and I'm going to give you facts and show you this bailout culture has been going on for decades. Nothing new here to see. So, with that being said, guys, as you come in, like the video, share the video. If you're not subscribed to the channel, please subscribe. Hit the notification bell, join my mailing list in the description so that you can get all of my notifications in case YouTube doesn't notify you. And also, if you want to support this content financially, my Cash App and my PayPal is in the description below. And with that being said, guys, I want to play something for you real quick because I laughed when I saw this. Let's flip this over. So, years ago, guys, this is how long I've been in the game for. This cartoon right here, Quantitative Easing, is from November 11th, 2010. And I remember these bears when they were talking about, this is when Ben Bernanke was the Fed chairman. This is when Ben Bernanke was the Fed chairman. I want you to listen to what they're saying here because you're going to laugh. And I'll put this up on my Instagram. I'm going to play this for you again. I want you to listen to what they're going to say.
Did you hear about the Fed?
No. What about the
Did you hear about the Fed?
No. What about the Fed?
They announced another round of the quantitative easing.
What does that mean?
It means they are going to make large asset purchases via POMO.
What does that mean?
It means they are going to expand their balance sheet and buy treasuries.
What does that mean?
It means they are going to print a ton of money.
So why do they call it the quantitative easing? Why don't they just call it the printing money?
Because the printing money is the last refuge of failed economic empires and banana republics, and the Fed doesn't want to admit this is their only idea.
So why do they want to print the money?
Because they say we have the deflation, and the deflation is very bad.
What is the deflation?
The deflation is when prices of the things we buy go down.
Isn't that good? Doesn't it mean the people can buy more of the stuff?
Yes, but the Fed said this is bad, especially during the recession.
So they think that during the recession, when the people have less money to buy the stuff, it is bad that the prices go down?
Yes, the Fed would rather have the inflation.
So why does the Fed think we have the deflation?
Because the CPI said so.
But aren't the food prices higher than a year ago?
Yes.
Aren't the gas prices higher than a year ago?
Yes.
Aren't the healthcare costs higher than a year ago?
Yes.
Aren't tuition prices higher than a year ago?
Yes.
Aren't the taxes higher than a year ago?
Yes.
Aren't the subway fares higher than a year ago?
Yes.
Aren't the stock prices higher than a year ago?
Yes.
Aren't the bond prices higher than a year ago?
Yes.
So what is deflating right now?
The only thing deflating that I can see is the Fed's credibility.
Did they have a lot of credibility to start with?
No.
Why not?
Because the Fed has been wrong about every major economic development in the past 20 years.
You mean they
So,
didn't see the internet stock bubble?
No. In fact, they helped fuel the internet stock bubble.
And they didn't see the housing bubble?
No, in fact, they helped cause the housing bubble.
And they didn't see the subprime crisis.
No, in fact, they told us subprime problems were contained right before the shit hit the fan and the Lehman.
So understand, guys, I've been doing this for a long time. I am not guessing and I am not speculating. I remember sitting in my locker room in 2008, looking at the screen, watching the recession happen and saying to myself, I wish I had money to invest in, but I didn't have money. I was a broke college student, and I remember sitting there. But I said to myself, this time, now in 2020, I have money and I'm not poor, and I'm going to invest every single dime I have in opportunities that's going to come up. We are at the tail end of our roaring 20s. That doesn't mean that there's not going to be opportunities. You have to know how to look through the madness and find the opportunities. This has been going on time and time again. Nothing is new. And again, this is from November 11th, 2010. This is when I used to be on the trading desk trading. So I'm not even going to get into the markets. Let's get straight into the news. It says the Fed announces a $1.5 trillion in capital injections to combat virus fallout and highly unusual disruptions. 1.5 trillion. But see, this is known as doublespeak. This is the Orwellian language that they use. They make it seem like it's only 1.5 trillion. But when you total up all of the programs, it's really $4.5 trillion that they're injecting. And I'm going to read this to you right now. It says the Federal Reserve Bank of New York will start adding fresh capital to money markets on Thursday to pad against virus risks and ease stresses on the Treasury bill market. The extraordinary funding measure first involves a $500 billion injection at 1:30 p.m. Eastern on Thursday. The bank said the cash will be added to money markets through a 3-month market repurchase agreement or repo operation. 1 month and 3-month repos for another $500 billion each will be conducted on Friday and continued to be offered weekly through calendar month, the bank added. So they made it seem like it's only 1.5 trillion, but when you add it up, because they're going to be doing this on a week by week basis, it's really $4.5 trillion. So when people come to me and they say, oh, look what's happening with gold. Gold is selling off. Guys, this is the speculative market. This is the paper market. This isn't physical demand, right? This is people speculating on the price. When you actually go to the gold websites, and I'm going to show you that in a second, you're going to start to see that they actually don't even have. Here we go to Jim. It says, note, due to extreme order volumes, please expect shipping delays of 10 plus business days. We also have a temporary $299 order minimum. I want you to think about that. So when people are telling me, oh, the price is going down, yes, those are hedge funds getting liquidated because they got caught on the wrong side of the trades, right? They got caught on the wrong side of trades, and they're being forced liquidated to raise more collateral. Because I told you guys I trade futures, right? And the day trading margins for trading futures, you only need $500 to day trade the S&P, the ES. And you only need, I think it's $750 per oil contract. And to hold an overnight margin, you only need $1,600. But when volatility increases, the brokers require you to have more margin in your account because there's more volatility and there's more risk. So what you're seeing when you see gold sell off like this is these are hedge funds being liquidated because these guys are going bankrupt. Many of them were over leveraged. They were too invested into the stock market. So you can see demand is surging to the point where the bullion dealers can't even meet demand. Now, it says the Federal Reserve cuts rates to zero and launches a massive $700 billion quantitative easing program, right? Massive $700 billion quantitative easing program. This is on top of the $4.5 trillion I told you about as well. So they cut rates to zero and the market still sold off. You know why? Because the market needs about 12 trillion to 15 trillion, right? They need about 12 to 15 trillion dollars to keep the market going. I watched this happen in 2008. I watched Cash for Clunkers. I watched TARP. I watched TALF. I watched the government pass all of these programs and create all of this inflation, When the government is printing money, right? This is from the this is CPI data that I'm using. I'm not making this up. I'm not guessing. From 1971, every single year we've had inflation. That means that the purchasing power of your money, your dollar, has lost value, because what happens is these companies, they speculate, they hollow out the middle class, they don't hire people, they ship jobs overseas, and then they lever up and they go into the debt markets, the junk bond markets, because interest rates are so cheap and they can borrow at very cheap rates. And they know that the government's going to bail them out. So now you, the taxpayer, not only do you lose your job, not only do you bail them out, but then they ship your job overseas or automate it. Look at this. From 1971, inflation was 4%, 3%, 6%, 11%, 9%, 6%. Every single year we have inflation. Every single year. Your dollar loses value every single year. Now, let's get to the good stuff. Now, they're talking about, as the U.S. Senate mulls a House virus bill, Schumer proposes a $750 billion in new spending. Now, we're already running $1 trillion deficit. And they're talking about adding another $750 billion in new spending. Problem, reaction, solution. So who's really going to get bailed out? White House braces for political fight as it readies virus airline bailout package. So now they're talking about bailing out the airlines. So let's look at the airlines. Let's look at what has the airlines been doing to the workers? What has the airlines been doing to the taxpayers? What has the airlines been doing, right? This is a very good opinion piece. It says, don't feel sorry for the airlines. Before providing them any assistance, we must demand that they change how they treat their customers and employees. Let's read this, because see, this is very telling. This is very telling, because what you're going to see what the airlines are doing and have done is very similar to what the automakers did to you in 2006 and 2007. It says, for American Airlines, the nation's largest airline, the mid to late 2010s were what the Bible calls years of plenty. Years of plenty. Follow this. This is important stuff. In 2014, having reduced competition through mergers and raised billions of dollars in new baggage fee revenue, American began reaching stunning levels of financial success. In 2015, it posted a $7.6 billion profit, compared, for example, to profits of about $500 million in 2007 and less than $250 million in 2006. It would continue to earn billions in profit annually for the rest of the decade. I don't think we're ever going to lose money again, the company's chief executive Doug Parker said in 2017. There are plenty of things American could have done with all of that money. It could have stored up its cash reserves for a future crisis. Let me read that to you again. There are plenty of things American could have done with all of that money. It could have stored up its cash reserves for a future crisis. Right? They could have stored some money, put some money to the side, right? You don't have to run lean and mean. But when you know the government's going to bail you out, why put money away for a rainy day when you can reap all of the reward and leave the taxpayer stuck with all of the risk? It says, knowing that airlines regularly cycle through booms and busts, it might have tried to decisively settle its continuing contract disputes with pilots, flight attendants, and mechanics. It might have invested heavily in better service, quality, to try to repair its long-standing reputation as the worst of the major carriers. So, they're making all of this money. Let's go back. Follow the article here. In 2006, they only made $250 million. In 2007, they only made $500 million. But in 2015, they made $7.6 billion. And they didn't take that money and try to pay their employees a fair wage. They didn't take that and try to give their employees better health care. They didn't take that and try to give their employees better benefits. Instead, many pilots are on public assistance and getting paid very crappy wages. They didn't take that and try to actually make the service better. Put money, no. They levered up because they knew they were going to get bailed out. And thank you for the donation, 100 for show. Right? It says instead, American blew most of its cash on a stock buyback spree from 2014 to 2020 in an attempt to increase its earnings per share. American spent more than $15 billion buying back its own stock. It managed, despite the risk of the proverbial rainy day, it shrinked its cash reserves. At the same time, it was blowing cash on buybacks. American also began to borrow heavily to finance the purchase of new planes and the retrofitting of old planes to pack in more seats. As early as 2017, analysts warned of a risk of default should the economy deteriorate, but American kept borrowing. It has now accumulated a debt of nearly $30 billion, nearly 5 times the company's current market value. Why are they allowed to do this? Because the Fed artificially kept rates too low. The Fed artificially kept rates too low. And then when Trump did that tax cut for the rich, what it did was they didn't take the money and invest it properly like a sound company would do. No, they took the money and brought back their stock to increase their earnings per share. So when you see these stocks going up, they're not going up because the companies are earning more money or because they're more profitable. What's happening is it's supply and demand, right? If you take more shares out of the market and demand remains the same, it's easy to push stock prices up. But as I've told you guys time and time again, it's a double-edged sword, because just like it's easy to push prices up, it's also easy to push prices down, which is why you don't see people stepping in to buy the dip, because you know who was mainly buying the dip? It wasn't investors like you and I buying the dip. It was the companies themselves buying back their own stock, which is now why the market's free falling. You don't see anyone stepping in, because the real value of the Dow, the good buying opportunity, is around 16,000, 17,000 is where I would be stepping in to put more capital to work. Thank you for the donation, Ezekiel Castleton. We know 45 is a fool, but Obama had the ball for 8 years, and look, Achilles, how high he hold them up. Thanks for the service. Thank you for the donation, Roberto Morales. Guys, it doesn't matter which president it is. And thank you guys for the donation. It doesn't matter if it's a Republican. It doesn't matter if it's a Democrat. It goes back to the Fed. Where does money come from? Because, see, when you understand where money comes from, the Fed creates these boom and bust cycles where it keeps happening over and over again. This is nothing new. And that's why I keep trying to tell you guys, if you study history, you would see it doesn't matter if there's a Republican. It doesn't matter if it's Paul Volcker, the Fed chairman, Alan Greenspan, Ben Bernanke. It's the same thing. It's printing money out of thin air. It's picking winners and losers. And what happens is it creates moral hazard. And to show you guys what I'm talking about, I'm going to flip over to a book called The Creature from Jekyll Island. I encourage you guys to go and read the book. Let's flip over to the iPad. I want to read for you some paragraphs real quick. Please go and get this book. It says, billions for the automakers. It says taxpayers would be on the hook either way. I'm reading this highlighted passage right here. It says altogether, the auto companies were giving $17.4 billion. 2 months later, Ford, which already had plants in Mexico, Germany, and Spain, began producing cars in China. GM soon followed suit and announced that it also would build more cars overseas. So you bailed them out so that they can ship your jobs overseas. So you paid twice, because the bailout money was printed out of thin air. So you pay taxes and inflation, and then you're going to pay increased taxes because obviously the government has to tax you on money that it spends, just for them to ship your job overseas. Thank you for the donation, Demetrius L. Flag. I can't stand bailouts. There should be a whole lot more broke rich people. Keep up the good work. No problem. Thank you again. So, it gets better. It says, among bailout recipients, it is common to see the money used in ways that destroy jobs for the American taxpayers who pay the bill. During the time when the U.S. banks were receiving more than $150 billion from the American workers, they were requesting special visas to import 21,800 personnel from other countries to replace Americans in upper echelon jobs, including corporate lawyers, investment analysts, programmers, and human resource specialists. And the beautiful thing about this is, see, I love this book because not only does he give you the information in a way that you can digest it, but then he gives you the articles where you can go and reference it. So you see next to this paragraph that I've highlighted where it says 60, you can actually go and it will bring you to the actual article. So what I did is I pulled the article up for you guys. And see, this is very powerful because Google and the Washington Post tried to scrub this from the internet, which is why it looks like this, because they tried to get rid of it. Well, what I'm going to do, I found it for you. This article is from Friday, May 8th, 2009. Think about that, right? They're taking your taxpayer money to bail out these companies who are over leveraging themselves and over speculating, because every time they get into trouble, you know what they say? If you don't bail us out, people are going to lose their jobs. There's going to be chaos in the street. And then you bail them out with taxpayer money. They pay themselves record bonuses, and then they take your job, or they don't want to pay you a fair wage. Now, let's read this real quick. I highlighted some stuff. It says the U.S. government, remember guys, this is in 2009, this article. The U.S. government is pouring billions into General Motors in hopes of reviving the domestic economy. But when the automaker completes its restructuring plan, many of the company's new jobs will be filled by workers overseas. According to an outline, the company has been sharing privately with Washington legislators the number of cars that GM sells in the United States and builds in Mexico, China, and South Korea will roughly double. The proportion of GM cars sold domestically and manufactured in those low-wage countries will rise from 15% to 23% over the next 5 years, according to the figures contained in a 12-page presentation offered to lawmakers in response to their question about overseas production. It says, more significantly, it raises fundamental questions about the purpose of bailing out these big companies. If GM is going to do more of its production overseas, then why exactly are we saving GM? Oh, damn, guys, I did it again. Sorry about that. I always do that. Flip it over. I keep doing that, guys. Sorry about that, but you heard me reading it. It says, more significantly, it raises fundamental questions about the purpose of bailing out these big companies. If GM is going to do more of its production overseas, then why exactly are we saving GM? The bottom line is GM would rather pay $2 an hour, and it's a slippery slope downward, said Alan Ruther, the UAW's legislative director. If GM is going to be getting government assistance, they ought to be maintaining their manufacturing footprint in the U.S. rather than going off to China, Mexico, and South Korea. This is what they do. This is what they do. You really got to take you have to take a step. That's why I say you can't get caught up in the day-to-day fluctuations of the price of gold, the price of silver, or the price of crypto. Guys, this system is unsustainable. They've been doing this. This has been going on time and time again. They did this back in that's why I said, God, I lived through this. I lived through this in 2008. I seen this happen already. The only problem was in 2008, I was broke and I didn't have any money to invest and I couldn't participate in anything. I was a freshman in college. I was sitting in my locker room looking at the market crash. And I remember looking back at AIG, Fannie Mae, Freddie Mac, Bank of America. And I said to myself, damn, if you would have put $1,000 into one of those stocks, you would be rich. And the same thing is going to happen again. The same thing's going to happen again. When you look at this op-ed, and you see what they did. You see what American Airlines has done. They tapped into the junk bond market. They levered up their balance sheet because they knew in a time of crisis, the government's going to bail them out. If you have a sound, proper, functioning business, you should have a rainy day fund. The government and the taxpayers should not have to keep bailing out these companies. They should be allowed to go bankrupt. It says, let's go back to American Airlines. It says, at no time during these years of plenty did American improve how it treats its customers. Change fees went up to $200 for domestic flights and to $750 for international flights. Its widely despised baggage fees were hiked to $30 and $40 for the first and second bags. These higher fees yielding billions of dollars yet did not help the airline improve its on-time arrivals, reduce tarmac delays, or prevent involuntary bumping. Instead, Americans' main innovations were the removal of screens from its planes, the reduction of the bathroom and seat sizes, and the introduction of a basic economy class that initially included a ban on carry-on luggage. I want you to think about that. So this is the company that you're getting ready to bail out. This is the company. Now let's look at, well, what did they pay their company, their CEOs, right? How much money did the CEOs earn? How much money did the president earn? The executive vice president? To basically run the company in the ground. To not pay pilots a fair wage. To price gouge their customers. Let's see, how much did they make? Well, here's Doug Parker, right? Chairman and chief executive officer. In 2018, 2017, and 2016, his stock awards were $11 million, guys. I can't. $11,939,000 in stock awards. $11,939,000. All other compensation, $60,000, $517,000 in 2018. Think about this. And this is going to get bailed out. These are the people who get bailed out. Now, doesn't this sound familiar to what the banks did in 2008, in 2009, and 2010 when they got the bailout money from the taxpayers? See, if you study history, you will see there's a pattern. It happened during the savings and loan crisis. It happened during the dot-com bubble. It happened during the real estate, the Great Recession bubble. And it's going to happen again. The market's going to crash. The government's going to come running in, and they're going to bail out these companies, and it's going to cause inflation. And they're going to take this money, and they're still not going to hire Americans. They're still not going to pay you a fair wage. They're going to try to get a robot to take your job, and if they can, they'll send it overseas. Look at this. Every year, 11 million, 11 million, 11 million. So in 3 years, to poorly run the company, all they've done is buy back the stock. He's made over $30 million. $30 million to poorly run the company. $30 million. Guys, I'm a capitalist. I believe in capitalism. I believe in free markets. I believe in competition. This isn't competing. This is saying, hey, I'm going to be gross. I'm going to over leverage myself because I know that the government is going to bail me out. It's called moral hazard. These companies should be allowed to fail. And if they're too big to fail, then they're too big to exist. If they're too big to fail, they're too big to exist, and they should be put out of business. Look at the president. $6 million a year, $7 million a year in 2017, and $6 million in 2018. Look at Derek Kerr. $3 million, $4 million, $4 million. This is what they got paid. This is what they got paid. But yet, they're talking about putting together a $50 billion plan. It says the Trump administration is grappling with which industries to bail out as thousands of businesses in the U.S. grind to a halt amid severe measures to curb the spread. I don't see how we get through this without wide-scale systemic solutions, said one top-tier investor. We're going to have to rewrite the rules to get to the other side. If the White House has its way, those solutions will include financial aid to the airline, cruise, and hospitality industries. Treasury Secretary Steve Mnuchin confirmed this weekend The administration has already begun putting together packages for industries it wants to support. People familiar with the matter tell CNBC. The U.S. airline industry confirmed Monday that it's seeking government assistance of more than $50 billion, including a mix of direct aid and loan guarantees. So when people come in here and tell me, oh, why are you buying gold? Why are you buying silver? Why are you buying crypto? Because I've seen this picture before. I know what's going to happen. I've been preparing for this day for the past 10 years. And I don't have time to sit. I'm not talking about no conspiracy, whether it was man-made or nothing. We're talking about investing. We're talking about making money. Guys, the world will still be here 2 years from now. The world will still be here 5 years from now. This is all a part of the game. And you have to get hip to the game and understand this. These are the rules. I'm not saying it's fair. I'm not telling you that this is how things should be. I'm just telling you what is. Okay? This has been going on since the Federal Reserve Act was passed in 1913. We've had booms and busts every 7 to 10 years. We keep having these booms and busts. The only thing that changes is the size of the bailouts. They go from a few hundred million to a few billion. And if you don't believe me, we're going to flip back over to the iPad and I'm going to show you some bailouts that has happened. And this is why I tell you guys, it is important for you to read this book, The Creature from Jekyll Island, because if you read the book, you will have a very clear understanding as to how this has been going on time and time again. So let's flip back over to the iPad. Guys, please go read the book, The Creature from Jekyll Island. It's a hard book to read. It's a big book because it will give you all of the history you need to know about the Fed. And thank you again for the donation, 100 for sure. End the bailouts. I agree with you 100%. End the bailouts. It says, Chrysler, follow me. In 1978, this is before 2008, guys. It says by 1978, the Chrysler Corporation was on the verge of bankruptcy. Corporations in America was allowed to fold. Think of the hardship to thousands of employees and their families. Let's go back. Hold on. Here we go. It says managers, bankers, and union leaders found common cause in Washington. If one of the largest corporations in America was allowed to fold, think of the hardship to thousands of employees and their families. Consider the damage to the economy as shockwaves of unemployment move across the country. Tremble at the thought of lost competition in the automobile market if there were only two major brands from which to choose instead of three. So here we go. It says, so a bill was passed directing the Treasury to guarantee up to $1.5 billion in new loans to Chrysler. This was in 1978. This was in 1978. 1978. The only thing that's changed is the size of the bailouts. That's it. Now we're talking about $50 billion bailouts for particular industries instead of 1.5. I'll read another one for you. Commonwealth Bank of Detroit. It says the next bailout occurred in 1972. Let me highlight what I'm talking about for you guys right here. Involving the $1.5 billion the $1.5 billion Bank of Commonwealth of Detroit. Commonwealth had funded most of its phenomenal growth through loans from another bank, Chase Manhattan in New York. When Commonwealth went belly up, largely due to securities speculation and self-dealing on part of its management, Chase seized 39% of its common stock. This is a bank bailout in 1972. 1972 was another bank bailout. If you understand this, you will see that this has been going on for decades. The only difference is the size of the bailouts. Thank you for the donation, Timothy Barnett. Now, here's something funny, right? So, let's flip back over to the main screen. It says, giant U.S. banks vow to stop buybacks to aid clients in the nation. So I just want to set this up. So what the banks are saying, they're saying we're not broke. Instead of buying back the stock, what we're going to do, we want to help the small guy. We want to aid our clients. Since when have you ever heard of banks wanting to help the small guy? Give me 1 second. Let me take a sip of water. So let's read this, because this is the comedy. This is you couldn't make this up. Steven Spielberg could not draw up and write up a better script, right? So the banks are saying, hey, we're going to do the right thing for a change. Rather than buying back our own stock, we're going to hold this money so that we can loan it out to people. When in reality, they are getting bailed out. They're getting bailed out through the repo market, and they've been getting bailed out since September 17th, and I'm going to show you guys that in a second. Remember, guys, I was showing you the Fed was injecting $100 billion a day into the repo market since September 17th. It says 8 giant U.S. banks, including J.P. Morgan Chase & Company and Bank of America, agreed to stop buying back their own shares through the second quarter, saying they will focus on supporting clients in the nation during the virus pandemic. The decision on buybacks is consistent with our collective objective to use our significant capital and liquidity to provide maximum support to individuals, small businesses, and the broader economy through lending and other important services. The Financial Services Forum and industry groups said in a statement Sunday, each member institution retains the ability to reinstate its buyback program as soon as circumstances warrant. So here's the reality. Basically, they've already been getting bailed out from the repo market. The Fed just said that they are going to lower the reserve requirements, so now they don't have to have a higher amount of reserves. So guess what they're allowing the banks now to go back to speculating. Hey, go back to inflating the stock market bubble again, which is why I told you guys, this is going to keep happening. It's going to keep happening. It says the move contrasts the 2008 credit crisis when banks were lambasted for waiting too long to suspend cuts to dividends and buybacks, leaving themselves too thinly capitalized as losses from the housing meltdown piled up. That led to government bailouts. Since then, regulators have forced the largest lenders to build up much bigger capital cushions. The firms are getting ready to submit data for this year's stress test. Well, let's go to a good old article. See, if you use your brain, 2 plus 2 will always be 4. You don't have to have a PhD in economics. You don't have to have a PhD in finance to follow this stuff. Just follow. Whenever you hear injecting, printing money out of thin air. Liquidity, printing money out of thin air. Quantitative easing, printing money out of thin air. Cutting rates, printing money. It's the same thing. It's nothing new. So let's look at this. It says the Fed has pumped $9 trillion into Wall Street over the past 6 months. But Mnuchin says this isn't like the financial crisis. It says since September 17th, 2019, 6 months ago, the Federal Reserve has loaned billions of dollars to Wall Street every single business day that the stock market has been open. This is the first time this has been necessary since the financial crisis of 2008. The fact in itself makes this very much on par with financial crisis of 2008. Since the Fed began its repo loan operations in September 17th, the tally of the Fed's cumulative loans to Wall Street trading firms comes to more than $9 trillion. So when you see the stock market pump, let's go back to September and let's look what happened. Look what happened in September, right? Let's look what happened in September. So when Trump says the economy's doing well because the stock market's up, yeah, because the Fed is pumping billions of dollars every day into the repo market. Look at the S&P chart. Soon as September hit, we had this little dump down, and then they started injecting all the money, and that's why the market rallied. And guys, there's 260 of you watching this. Hit the like button. It helps the content rank in the search engines. If you're not subscribed and hit the notification bell and put it on all. So this is why the stock market's up, because the Fed injected trillions and trillions and trillions and trillions of dollars into the stock market via the repo market. See, they come up with all these fancy names to try to confuse you. And they try to say, "Oh man, it's so hard to understand central banking." You know, you have IOER, you have the discount window, you have overnight lending, you have the repo market, then you have the reverse repo, then you have quantitative easing, then you have ZERP, and they come up with all of these fancy names to confuse you. And it's very simple. They are printing money out of thin air, and they are funneling it through banks, and then these banks are loaning it to speculators, hedge funds, to then go out and speculate and push the prices of stocks up. And then on the fiscal side, because see, the Fed handles monetary policy, and then the government handles fiscal policy. So now you have the fiscal side cutting taxes and giving tax breaks to the rich. But the rich are saying, hey, we're not going to hire people, right? We're not going to invest in jobs. We're not going to invest in CapEx and get better equipment. No, what we're going to do, we're going to invest in automation to cut jobs. And we're going to buy back our stocks, pay ourselves bonuses, and basically leave the taxpayer and the middle class on the hook. That's what we're going to do. And I know there's some of you guys coming in, so I want to play this video for you again so you can understand. This is in 2010, November 11th. I want to play the video again because there's new people coming in. Listen to what they had to say about quantitative easing. I remember when these extra normal videos came out and they were talking about iPhones, but they're talking about quantitative easing. Two Little Bears, a cartoon, can explain to you what quantitative easing is. You don't need a PhD in finance to know what quantitative easing is. Here we go.
Did you hear about the Fed?
No, what about the Fed?
They announced another round of the quantitative easing.
What does that mean?
It means they are going to make large asset purchases via POMO.
What does that mean?
It means they are going to expand their balance sheet and buy treasuries.
What does that mean?
It means they are going to print a ton of money.
So why do they call it the quantitative easing? Why don't they just call it the printing money?
Because the printing money is the last refuge of failed economic empires and banana republics, and the Fed doesn't want to admit this is their only idea.
So why do they want to print the money?
Because they say we have the deflation, and the deflation is very bad.
What is the deflation?
The deflation is when prices of the things we buy go down.
Isn't that good? Doesn't it mean the people can buy more of the stuff?
Yes, but the Fed said this is bad, especially during the recession.
So they think that during the recession, when the people have less money to buy the stuff, it is bad that the prices go down?
Yes, the Fed would rather have the inflation.
So why does the Fed think we have the deflation?
Because the CPI said so.
But aren't the food prices higher than a year ago?
Yes.
Aren't the gas prices higher than a year ago?
Yes.
Aren't the healthcare costs higher than a year ago?
Yes.
Aren't tuition prices higher than a year ago?
Yes.
Aren't the taxes higher than a year ago?
Yes.
Aren't the subway fares higher than a year ago?
Yes.
Aren't the stock prices higher than a year ago?
Yes.
Aren't the bond prices higher than a year ago?
Yes.
So what is deflating right now?
The only thing deflating that I can see is the Fed's credibility.
Did they have a lot of credibility to start with?
No.
Why not?
Because the Fed has been wrong about every major economic development in the past 20 years.
You mean they didn't see the internet stock bubble?
No. In fact, they helped fuel the internet stock bubble.
And they didn't see the housing bubble?
No, in fact, they helped cause the housing bubble.
And they didn't see the subprime crisis?
No, in fact, they told us subprime problems were contained right before the shit hit the fan and the Lehman went bankrupt.
So has the Fed ever been right about anything?
Let me see if I can think of anything. No, nothing.
Who runs the Fed?
The Fed is...
So I just want to play that again for you guys. Remember, this is back in 2010. This is how long I've been studying this stuff and reading about this stuff. This has been going on for decades. This is nothing new. This is why I'm so confident about investing in precious metals. This is why I'm so confident about investing in crypto, because I've seen this play out so many times. Excuse me. This is going to keep happening over and over again. It is known as the boom and bust cycle. What happens is that these companies, they lever themselves up because there's something known as moral hazard. Right? And the Fed, what the Fed does is they blow these bubbles because they keep interest rates low for too long. And then what happens is the market dives down, problem, reaction, solution. A bunch of companies go bankrupt. A bunch of mergers and acquisitions happen. People get bailed out, loans get guaranteed, money gets printed, and it goes back to business as usual. The problem is income inequality continues to grow because of this, because many of you are not participating in this wealth transfer, because you don't get to touch the money before the inflation. The inflation hits you first. I mean, they get the money before the inflation hits you is what I meant to say. They get to touch the dollars before it loses its purchasing power because they're the closest to the money printer. And by the time the money makes it to you, it's done lost 10% of its purchasing power. You know, and I show you guys this chart all the time, and I'm going to pull it up again for you guys. The purchasing power, give me 1 second. I'll pull it up. Just pull up the pictures and let's go to downloads. You know, I like to show you guys the purchasing power because it shows you can see it in your face. Give me 1 second. Let me pull it up. Right? This is your purchasing power. This is the value of $1 from 1913 as far as purchasing power. Right? Look at the purchasing power. 1913, the Federal Reserve Act was created. 1933, FDR's executive order makes it illegal to hold gold coin, bullion, or certificates. 1944, the Bretton Woods established the USD as the world's reserve currency. 1971, Nixon closes the gold window. End of Bretton Woods, beginning of the modern day fiat currency system. You can see it. You can see it. Like this isn't complicated because money is debt. And the only way the economy can grow is they have to keep putting people into debt. That's it. There's no other way the economy can grow. You have to go into debt for the economy to grow. It's in your face. It's just a matter of, are you going to accept it? And as I showed you guys earlier, look what's happening to the gold and silver bullion dealers. Right? It says, due to extreme order volumes, please expect shipping delays of 10 plus business days. We also have a temporary $299 order minimum. So they're going to use what's happening with the virus as an excuse while the economy's crashing. But the economy was already crashing back in September. The Fed was injecting trillions upon trillions of dollars into the system to keep it going. So now, let's change gears and let's talk about cryptocurrency, right? Right now, what's happening is we are getting ready to come up on the halving. That's in every transaction, every block that's created, every 10 minutes on average, a new block is created and appended to the blockchain. And there's something known as a coin-based subsidy or the block reward. And every 210,000 blocks, roughly every 4 years, the block subsidy gets cut in half. See, this is what makes Bitcoin valuable because it's something known as Bitcoin is very deflationary, where there will only be less than 21 million Bitcoin ever in existence. And see, this is why I said to you guys, after the financial crisis of 2008, the pseudonym Satoshi Nakamoto created Bitcoin. And inside of it, the message they had, the chancellor is on the brink of bailouts. So right now, this is the countdown clock into the next block reward halving, right? 56 days. It says the Bitcoin block mining reward halves every 210,000 blocks. The coin reward will be decreased from 12.5 Bitcoin to 6.25 Bitcoin, right? Every time the halving happens, the price of Bitcoin skyrockets. And it just so happens that we're almost 60 days away from the halving. And now all of a sudden the price starts to crash. Now I'm going to show you guys a little bit. I don't want to over confuse because I understand this is computer science and some of you guys, don't understand the technology and stuff like that. So I want to keep it simple. But this is blockchain.info, right? See, in crypto, especially in Bitcoin, we have a saying where we don't have to trust, we can verify. So I can see when every block is formed and it's appended to the blockchain. So you can see 20 minutes ago, this was a block. 28 minutes ago, a new block. 29 minutes ago, a new block. 47 minutes, a new block. And on average, every 10 minutes, a new block is formed, right? And then you can go in here when you click on it. So we click here. Let's just click on it. We open it up on the block explorer. And right here it says the Coinbase newly generated coins. So in every new block, there's something known as a block subsidy where they're going to have all of the transaction fees plus the block subsidy. So right now, the block subsidy is 12.5. It's going to be cut in half to 6.2 in the next 56 days, 6.25. So as you can see, Coinbase right here, and you can see this is 12.9 BTC. So it has the 12.5 Bitcoin in the transaction plus the fees. Again, so why am I bringing this up? Because we have something known as the stock to flow model. In order for something to be money, it has to have a low stock. It has to have a high stock to flow ratio. And I'm going to show you what I mean by that in a second. This is a guy by the name of Plan B. And he made a model. This is the model right here, the stock to flow model. And every time you see this purple line spike, this is the halving that happens every time where the block subsidy gets cut in half over and over again. Now you have to think about this. There is no Fed to bail out Bitcoin. You're not going to see somebody inject $1 trillion of liquidity into the Bitcoin market. It's the same thing with gold. What makes gold money is it's hard to produce more gold. You can't just go and just find more gold. You can print more dollars. Literally, now it's digital. And I'm going to read this article so you can understand what the stock to flow simply means. The stock is everything that's above ground, that's in existence here today. The flow is the amount of production. So let's get to the article. But I wanted to show you the model. This model will be invalid if Bitcoin drops below $2,500. Well, let's get to the Medium article. Right? It says scarcity and stock to flow. Dictionaries usually define scarcity as a situation in which something is not easy to find and get, right? That's what makes something scarce. So the reason why gold was used as money is because it's hard to find gold. You can't just print more gold. And see, the dollar became the reserve currency because it piggybacked and was pegged to gold. That's what made it valuable. But then after the Bretton Woods and then after Nixon took us off the gold standard, now the dollar basically floated as its own reserve currency, which was not valuable. Right? So it says Safadi Amos, he also the author of the book The Bitcoin Standard, talks about scarcity in terms of stock to flow ratio. He explains why gold and Bitcoin are different from consumable commodities like copper, zinc, nickel, brass, because they have a high stock to flow ratio. Right? For any consumable commodity, doubling the output would dwarf any existing stockpiles, bringing the price crashing down and hurting the holders. For gold, a price spike that causes a doubling of annual production will be insignificant in increasing stockpiles by 3% rather than 1.5%. What he's simply saying is that the reason why you can't use copper, aluminum, or zinc as money, because it's easy to find it and produce it. You can bring their total existing stockpile back above ground in less than 2 years. It would take 62 years of current production to bring all of the gold from under the ground, above ground, to total what's above ground right now. And I just want to show you this right now, right? So here we go. We got gold, right? So the current stock above ground is 185,000 tons. The flow is 3,000 tons per year. Right? So that gives it a stock to flow ratio of 62. 62 is what the stock to flow ratio is. And the supply growth is 1.6%. Now, obviously, these numbers are off because this is older and gold's currently trading at around like $1,500 an ounce. But think about that. See, the reason why you won't use platinum or palladium is because it's easy to produce more of it. It's not hard to find it. It's hard to find gold. It's not easy. Even if you doubled the production from 1.5% to, let's say, 3.2 or 3%, it's going to take you, 31 years of production? That's what makes something valuable. That's what gives something money. Right? So it says gold has the highest stock to flow, which is 62. It takes 62 years of production to get current gold stock. Silver is second with a stock to flow of 22. This high stock to flow makes them monetary goods because, again, you can't just inflate the market with more gold. You can't inflate the market with more silver because it takes money and resources to find it, mine it, and refine it and bring it above ground, right? It says palladium and platinum and other commodities have stock to flow barely higher than 1. Existing stock is usually equal or lower than yearly production, making production a very important factor. It's almost impossible for commodities to get a higher stock to flow because as soon as somebody hoards them, prices rises, production rises, and prices fall again. It's very hard to escape this trap, which goes into, for example, like oil. It's easy to go and get the oil, right? So if people begin to start hoarding a bunch of oil, then the drillers just produce more of it. You can't do that with gold. To get the current stock above ground, it would take you 62 years. That's what gives it value. And when you understand the Bitcoin subsidy, and when you understand the halving that's coming up, where the block subsidy is going to get cut in half, Bitcoin is about to have a higher stock to flow value than gold. So I don't want to read the entire article. I would encourage you guys to read the article. I don't want to bore you with this right now. So let's paste this in the chat. But that's what gives money value. The fact that you can't just print more of it. Right? That's why I invest in cryptocurrency. That's why I invest in precious metals, because you can't just print more of it. Now, the next thing I want to do is I want to talk about this because I've seen a lot of people sharing this article. And I'll do a whole video on stock to flow. We're coming up on 60 minutes. I like to keep these streams less than an hour and a half. It says Tennessee man sitting on almost 18,000 bottles of hand sanitizer says he's doing a public service, right? It says the backlash to the interview grew so severe. However, they have now donated their goods. Even the state attorney general office opens an investigation. It was crazy, man. No, it was crazy money. Matt Calvin reportedly told the Times last week, revealing that his first 300 bottles of hand sanitizer sold out for between $8 and $70 a piece almost immediately, multiples of the prices he had paid for them. He also sold 2,050 packs of face masks on eBay for $40 to $50, sometimes higher. In fact, the story notes that Calvin, a former Air Force technical sergeant, derives a six-figure income from selling Nike sneakers, pet toys, and trending products on Amazon. So a lot of people were sharing this story and saying like, oh, some people, like most people, were upset that they were basically price gouging people for hand sanitizer. Basically what they try to do is go buy up a whole bunch of hand sanitizer and charge crazy, ridiculous prices for this. I'm about free markets. I'm all for capitalism. This is not capitalism. This is vulture behavior to the highest degree. Now, some people try to say, well, what's different? What's the difference between this and someone buying put options in an airline stock after 9/11? Here's the difference. People don't need those stocks to be healthy. Right? When you buy up a whole bunch of masks, when you buy up a whole bunch of hand sanitizer in bulk like that, 18,000 bottles, and you're not charging a 25% markup or a 50% markup. You're overcharging people by thousands of percent in a time of crisis and need. That's greed. And see, one thing about me, I love the free market because you know what Amazon did? They shut them down. Amazon would not let them sell their products. It says, Calvin reportedly said he doesn't want to become infamous for hoarding. If I can make a slight profit, that's fine, he said. But I'm not looking to be in a situation where I make the front page of the news for being that guy who hoarded 20,000 bottles of sanitizer that I'm selling for 20 times what they cost me. See, understand, let's take a step back. There's one thing if you're doing this because you're preparing for the zombie apocalypse. That's cool. But you purposely did this with the intent to overcharge and price gouge people. And you can't compare this to, buying put options in the airline stock. That's not a matter of life and death. And I'm not saying hand sanitizer is. But now, let's start to build on this and think further out. What happens if people start buying up ventilators, buying up masks, buying up a whole bunch of medicine that people may need? That's not fair. That's not free markets. But Amazon stepped in and said, you know what? You want to be greedy? They won't even let you list it. See, you have a right. You have a freedom of expression. You have freedom of speech. And people have a right to respond to those freedoms that you have, right? So if you call someone a racial slur, you have a right to say that. And they have a right to punch you in the mouth. You have a right to say whatever you want to say. But you can't control how people respond. So now you got this backlash and you will be infamous forever for doing this in a time of need. This is not the way markets should behave, right? This is greed to the highest degree. And I'm glad that Amazon shut him down and will not allow him to sell it, right? Markets should operate where there's supply and demand. You are artificially buying up the supply to push prices higher. And you're using fear and panic to profit off of an essential good. And when you go down this slope, you create this slippery slope now. Because who's to say people can't go and corner the market with a whole bunch of, medications and essential supplies? And I heard some people say, well, Apple does it. Apple price gouges you. You don't have to buy an iPhone. You want to buy an iPhone. When we're in the middle of a pandemic, people need Lysol. People need toilet paper. People need food. It's one thing if you're just storing it, but don't buy this on the purpose of trying to sell it and make a profit. That's completely different. That's completely different. 1,000% different. Now I'll take some questions. I'll look in the chat and see what some of you guys are talking about. eBay and other sites shut those people down too. Yes, they did, and they should shut them down. There's 265 of you guys watching. Please hit the like button. It helps the content rank in the search engine. Appreciate it. Farmer Bro tried to do that too. His name was Martin Scarelli. Martin Scarelli tried to do the same thing. He's sitting in federal prison right now for that. Again, it's just this is the system that we live in, and I'm all for competition. I'm all for free markets. I'm all for that. I'm a capitalist. I'm a bootstrapper. I'm a do for self. I'm all of those things. But I also believe in having some common sense with it. And I could see if you brought it for $2 and sold it for $3. But if you're selling it for $8 and $10 or $70, that's just ridiculous. Let's see. Never let a good crisis go to waste. More money, more money. Yeah, I know. You should charge for this type of game. Yeah, I should, but I hope that people will see value in this, and many of you do, and you donate, because the more you donate, it allows me to improve the quality. It allows me to do better research, and it allows me to find, like I said, it's quality content and put it and package it in a way. So again, I appreciate everyone who's donated. Even those of you who have donated via PayPal and Cash App, I appreciate that as well. I will definitely give you guys who donated via PayPal a shout out and during the next live stream. I would have kept quiet. Yeah, exactly. It's nothing wrong with it. Like, I stocked up a lot of water and supplies, but I'm not trying to sell it to people, right? I'm just, this is for me and I plan on using the stuff that I've purchased. See, there's nothing wrong with if you want to, prepare for a crisis. That's great. But don't price gouge people, and don't do stuff like that. Thank you for that, Joel Hogan. I appreciate the donation. Is there an actual law against this type of price gouging? Yes, there is. They're investigating him as well. He's going to definitely end up getting fined for sure. So, it wasn't worth it. Makes sense to back crypto with gold, leaves too much room for deviations. Well, you have to understand. I tell you this. I tell you guys this all the time, right? You're dealing with a $90 billion market cap when it comes to Bitcoin. $90 billion. Ethereum, 12. These markets are tiny. These are small markets. When the Fed pumps all of this liquidity into the system, this $4.5 trillion is going to go into the system. Where do you think it's going to flow to? It's going to flow back into crypto. It's going to flow back into the stock market. That's where it's going to go. And again, I tell you guys this all the time. If we can get to a $2 trillion market cap in Bitcoin, that puts Bitcoin at $100,000. The gold market cap right now is $8 trillion globally. The top 300 pension funds, they have $18 trillion under management. If obviously crypto's not ready for pensions are not ready to invest in speculative things like crypto yet. But as the market matures, you get 10% of the global pension funds. That's $1.8 trillion. So it's very possible, right? Like, so when people say, "Oh, Bitcoin fell 20%," look how small it is. It's tiny. It's a $90 billion market cap. Like Apple has $1 trillion. It's $1 trillion company. Amazon's $1 trillion company. So this is a global asset. It has time to mature. Right? I recommend a nano ledger, or you can download the Bitcoin Core wallet. And I'm glad you mentioned that. I did a video on that for you guys. Give me a second. I did a video on that about that. And guys, like the video, please. It helps the content get out there. Give me 1 second. I just did a video about this right now, the other day, about downloading. I showed you how you can run a full node. I showed you how you can get your private keys. There goes the video right there. I did a video right here, how to download the Bitcoin Core wallet and get your private keys while running a full node. So looking like a fifth wave blow off rally, the market will to 2009 levels, possibly. I don't believe that they're going to let markets get that low. I believe that the Fed's going to step in. I believe as soon as the Dow touches 16, 17,000, the Fed's going to start buying ETFs and buying stocks, just like they did with QE when they were buying treasuries. I don't believe that they're going to, for 1 second, let this market go down at all. They're going to buy as much. I have the Nano S and the Nano X. The Nano X allows you to hold at least, I think, over 100 different cryptos. And the Nano S only allows you to hold one. There's no way that the Fed are going to sit here and let this market crash. So I believe in dollar cost averaging, as I've been telling you guys time and time again. I don't believe that you should go all the way in at one time. If you have $10,000, $15,000, $100,000 sitting on the sideline, you buy in bits and pieces. You don't buy it all at one time, and you build a position over time. That's how I've always. There's a difference between a trade and an investment. Like when I'm buying crypto, I'm investing in. Remember, guys, I've been in Bitcoin since 2011, 2012. I've made a ton of money on the upside when it comes to Bitcoin, right? So I'm not worried about money right now, and this is why it's called personal finance. And this isn't financial advice. This is just me educating you. You have to know where you are financially and what you are trying to accomplish. Now, if you only have a couple $1,000s, you don't have no business investing, in my personal opinion. You should be investing in skills so that you can earn more money, right? Or you should be getting prepared to buy supplies, water, food, stuff like that. This is for people that have disposable income. Investing is for people who can afford to risk capital, right? If you are dirt poor and you're broke, you have no business investing, right? This is for people that, they actually have capital to invest and they have disposable income. Then there's a difference between a trade where I'm just trying to hold this for a week or two, a month or two, or maybe a year, versus an investment. Like when I buy gold, that's an investment. I'm holding gold for the next 3 to 5 years. I've been investing in gold and silver going back to 2011, 2012. I've been investing in crypto, Bitcoin mainly, going back to 2011, 2012, right? So I have a different philosophy because I've made a lot of money doing this, so I have capital where I can buy, in increments. Other people don't. And this is why you need to understand what you're doing before you do it. And if you don't understand something, sometimes it's okay to miss it, right? You don't have to buy. You don't have to buy because I'm saying buy, right? Buy things that you understand. If you understand stocks, buy stocks. If you understand bonds, buy bonds. If you understand real estate, invest in real estate. If you understand day trading, day trade. If you understand swing trading, swing trade. If you understand options trading, do options trading, right? There's different ways to skin this cat. And that's another thing I wanted. I'm glad you mentioned that to me, because right here I wanted to highlight this. It says, Amazon to hire 100,000 more workers and give raises to current staff to deal with demands. There's going to be opportunity. There's going to be a lot of people trying to sell you on the end of the world, right? There's going to be people telling you that, reptilian, shape-shifting aliens are going to come. Mama Oya's going to come from the fifth dimension. This is man-made. The government made this. There's going to be all kind of crazy conspiracy theories. And guys, I fell down that rabbit hole too when I was younger. And as you mature, you begin to realize life is about difficulty mixed with opportunity. Life is about difficulty mixed with opportunity. Yes, some of you are going to lose your jobs. Some of you are going to lose your businesses. Some of you may lose your homes. And then other people are going to buy those homes. And other people are going to get those jobs, right? There's always going to be opportunity. Things are going to go up. Things are going to go down. It's a pendulum, right? It's the best of times for some people. It's the worst of times for some people. You have to figure out where you fit in that equation. But look, they're hiring 100,000 new workers. There will be jobs. Trust me when I tell you, there will be opportunity. The world's not going to end. Your rent is still going to be due next year. Okay, you're not going to the fifth dimension. You're not going to astral project. Okay, no one's going to come down from the sky and rescue you and save you. Again, I'm not trying to get into no religious debates. I'm just telling you, we will be here 5 years from now. We will be here 10 years from now, God willing, as far as, you being alive. But I'm saying as far as the world will be here. The economy will be here. We will go through booms and busts. We will go through recessions. We will go through depressions. Even during the Great Depression, for some people made a lot of money. For other people, it was bad. It all depends on where you are. You have to find your way to navigate this. And to navigate this is going to be different. But do not allow people to use this as this fear, to use your fear against you, right? Properly plan, right? Have a plan in place, right? If you have money, yes, cool. Look for investments. Don't be greedy, right? There will be plenty of opportunities in the next month or two. You don't got to start putting money to work right now. There will be plenty of opportunities in the coming weeks and the coming months. I'm just telling you where I put my money at. I'm telling you that I've been doing this I've been seeing this since 2008. I've been studying. I've been researching. I know what's going to happen. We're seeing them talk about cutting interest rates to zero. They're talking about going to negative rates. Right? We've already seen Europe. They've done bail-ins where they basically have taken customers' money, depositors. We've seen this. This is nothing new. You just have to know how to position yourself where you are and depending on what's going on with you. Now, should you have an emergency plan? Yes, you should. Should you have water? Absolutely. Should you have masks? Absolutely. Should you have gloves? Absolutely. Should you have some cash? Absolutely. Should you have some gold? Physical gold? Yes. Silver? Yes. Yes. It's called diversification. It's called the portfolio. And I tell you guys, build this stuff up over time. Wealth is built over time. I showed you guys the calculator. About every 3 to 5 years, if you're putting $200 or $300 into different investments and you're making 5 to 6%, I showed you guys the calculators. Some years, like last year, the S&P returned 20%. This year it may return negative 6%, right? It's about an accumulation over time. You accumulate wealth over time, right? If you're 20, 25, 30, you're going to retire one day. You have to think about that. See, you can't, a lot of you have these, that's why I laugh when people come in and say, look, Bitcoin is down. See, look, Bitcoin's a scam because it's down. I told you it's a scam. Guys, you don't build wealth overnight. You don't buy something and get rich today. It doesn't work that way. Anyone telling you you're going to buy this penny stock, you're going to buy this real estate deal and you're going to just get rich in 2 or 3 years. I mean, that's like hitting the lottery. Can you buy you one cash flowing real estate property every 3 to 5 years? Yes. Right? Every 3 to 5 years, can you buy you a cash flowing real estate? Can you then build up some equity in the home, get some appreciation in the home, and then refi and take the money out and go buy another property, particularly a multifamily? Can you do that every 3 to 5 years? Yes, you can. Right? We're talking about, think about this. If you can get a income that's coming in passively between $2,500 and $5,000 on a monthly basis, whether it's through dividends, whether it's through real estate, cash flowing real estate, by the time you're 50, 55, 60, that's what you're looking. That's the average person. Read the book, The Millionaire Next Door. I've broken this down for you guys, right? I don't come up here and sell you guys some idea that you're going to get rich. You're going to make $1 million. I'm telling you that if over time you focus on building wealth, you will build wealth. Right? If you focus on understanding inflation, right? If you understand these numbers here and you understand purchasing power and you know that fiat currency is just a medium of exchange, it's not real money. If you understand these things and you know these things, you'll be fine. Right? It took me time to build up to where I am. I didn't get to where I am overnight. I've made some money. I've lost some money. I've been scammed. I've been burned. It happens. It's a part of the deal. Right? All my money's not in crypto. All my money's not in gold and silver. I have some real estate as well. Right? I own some stocks as well. It's called diversification. So Warren Buffett talks about this, right? And I'm not even a fan of Warren Buffett, but he says, you start with 1 or 2 things first. Find something that you like and that you understand. And then after that, you may understand real estate, or you may understand fix and flips, or you may understand, a drop shipping on Amazon or drop shipping on eBay. That may be your calling. Network marketing may be your thing, right? Affiliate marketing may be your thing. Find what works for you, focus on that, and begin to get the skills. Put in 10,000 hours, like Malcolm Gladwell's book, Outliers. Put in that 10,000 hours, become an expert in something, and then venture out, right? I've tried a bunch of different things. I've traded Forex. I've traded stocks. I've briefly dibbled and dabbled in options, right? I've tried swing trading. I've done network marketing. I've done affiliate marketing. I've done email marketing, right? I've tried a bunch of different things. It takes you time to figure out what will work for you. And you have to go through that phase. There is no overnight success. There isn't going to be this one book or this one course or this one video that's going to just make you learn it all. Guys, I've been doing this going back to 2008 when I showed you this extra normal video. This back in 2010, man. I've been doing this for a very, very long time. I was 18, 19 years old when I first started, and I went through my phases. I went through the David Ikes and the Peter Schiffs and the Ron Pauls, and some of the information they gave was good, and then some of it wasn't, right? You got to find what works for you and find where you fit in at. You don't just buy something because I say so. You don't just do something because I say so. You don't do something because Peter told you, because, some guy on the internet. Find what works for you and take the time. There's no shortcut to success. There is no shortcut to success, period. Yes, it's going to be difficult for some of you. When this recession hits, some of you are going to lose your jobs. Some of you may lose your homes. Some of you may buy homes, right? Some of you may get your dream home for 30% cheaper than you thought you could have purchased it for before. Some of you may get a good, sweet deal on some loans, right? And then some of you may go bankrupt. You have to understand that. Too sooner, I wouldn't get a mortgage or anything right now. I wouldn't be looking to buy any real estate, guys. You're gonna have 3 months from now, 6 months from now, you're going to have a lot of opportunity. I'm just getting you to understand what I seen happen in 2008, and then I witnessed in 2009, 10, 11, 12, that if I would have took $1,000 and I would have put it in AIG, if I would have put $1,000 in a Fannie Mae, Freddie Mac, I would be worth millions of dollars. If I would have put $4,000 or $5,000 into these stocks that were trading at pennies, these bank stocks, could you imagine the money I could have made if I brought Bank of America when it was trading for pennies? You know, like Mark J said, they will implement helicopter money soon. I listen, guys, this is not complicated. I've seen this before. I've seen it. I've seen TARP. I've seen TALF. I've seen cash for clunkers. I've seen the stimulus package. I've seen it. And they're going to do the same thing again. Right? Economic collapse is not coming. You're not going to see a collapse. What you're going to see is the government print trillions of dollars. That's what you're going to see. Boeing is taking a hit, but they still own the planes. It's just a matter of time before they bounce back. Yeah, you got to, again, guys, this is going to take about 6 months to a year to sort itself out. I'm just trying to get you to understand that there's going to be opportunity, right? There's going to be opportunity, plenty of opportunity. A lot of people are doing that, Dante Harrison. A lot of people are taking out money and refinancing their homes. A lot of people are doing that because the rates are just so low. I stopped Forex because Forex is a very shady market, and it's very it's easier to trade futures. I trade futures because the price ladder. You can get the level 2, and you can, like with Bookmap, I can see all of the bids and offers above and below the market. The market in Forex is very shady. There really is no good level 2 data, and there's a lot of price manipulation. So it's not a good market to trade as far as the way I like to trade. And that's another thing. Some people love Forex. They love the leverage they can get in Forex, and they love what they love the I guess the indicators or whatever, or they can trade overnight. Me personally, to me, there's just better markets to trade. There's much more liquidity in futures. Like, you're going to hear people say, oh, the Forex market's a $1 trillion market. Most of that $1 trillion is just regular businesses converting currency. It's not the actual Forex market that you're trading in. Regular people who are converting currency don't go into those markets. And there's a lot of, what's the word that I'm looking for? There's a lot of hidden liquidity and a lot of manipulation in the Forex market. Again, the futures market to me is an easy market to trade, and it's better leverage in futures. You could trade many. You could open up a futures account for $500 and trade the minis. So like, it's better. It's much easier to trade, much easier to read. The moves are much cleaner. Forex, there's a lot of geopolitical risk. You get these crazy moves, and they blow right through your stops, and you blow your account. So it's just not for me. I hear Europe rates are negative, so they pay homeowners. I don't know too much about it. I know the rates are negative in certain parts of Europe. Overhead fees will make you choose the best options, like Forex, I'm sure, has a monthly fee, website monthly fee as well. This is why you got to choose something best, something you can do. I paid a lot of money to learn Forex and never made any money, but lost a lot. Yeah, and this is why you have to find what works for you. That you have to find what works for you. I'm just telling you, there's a lot of manipulation in Forex. I traded Forex for a good 6 months. I didn't lose any money, but I didn't make any real money. Stocks are going to give you the most opportunity because there's so much volatility on a day-to-day basis. The problem is just finding the right stock every day. And that's one of the biggest problems with stock trading. And then you start dealing with the HFTs, the computers. There's too many HFTs in the regular stock market, where they hunt your orders as well, or they'll jump the queue and jump in front of you. Again, futures to me, it's a much more liquid, thicker market. It takes a lot of money to move those markets, so you don't really see these crazy moves. And what happens with futures is because so many people hedge themselves in liquid markets like futures, it trends much better. And I'm a trend following trader. So, like, for example, I know, like, the market's trading down, so I don't have to guess. I know coming into the market every day, I need to be looking to be short. And when you look at the S&P, it trends so smoothly. It's so easy. It's easy to trade those markets, And again, like I said, I got a lot of leverage. For $500, I can trade, a contract. All I need is $500 in my account. So it's so much leverage. It's just, to me, it's a cleaner market and smoother to trade for me. Now, for other people, most of the guys who trade Forex, to be honest with you, they're not really traders. They're just affiliate marketers who they sell you brokers. and they make commissions off of what you open your account with. I'm gonna be honest with you. That's another thing I noticed with Forex. I haven't really met any profitable Forex traders who can actually log into their account and show you that they make money trading. Like, I can log into my account and show you I make money. I make a living from trading. I don't sell products. I don't sell tools. I don't sell you brokers. Like many of the Forex traders you see on YouTube or you see on Instagram, and they're on the jets and they're down in Miami. Those guys, they're marketers. They sell you the idea of trading, and then they sell you paid Facebook groups, websites, a bunch of affiliate products. They don't actually trade and make money. Like, I trade for a living and make money. I manage people's money is what I do. Immaculate China is now getting control of the virus, but millions have died. No, I wouldn't say millions. I would say thousands. But again, with China, you never know, right? China's manipulators of data, so you just never know. They're a communist country, so you just never know. Me and Mark J had made a bet, and we bet that I bet Bitcoin would touch 10K before 5K. He bet 5K before 10K. We bet $100. I was wrong. And you can ask him. I'm a man of my word. I paid him $100 earlier today. I'm very transparent and honest. I'm not one of those guys who lies to you guys. So if we ain't made a bet. Watching the fourth state government propaganda tools. I would recommend 2 versus ETFs over the next week until the Fed injects cash into the stock market. Yeah, Adrian Patelli, that's exactly what I wouldn't trade. I've gotten burned. I remember when I first started day trading, I was messing around with the 3x, the triple inverse ETFs, and I got burned messing around with those things. But you can make some really good money trading those if you know what you're doing, especially if you have some experience. But that's the thing. You have to take your time and really learn. And this is why, guys, they have demos like on Ninja Trader. I tell you, I use Ninja Trader. With Ninja Trader, there's a demo, right? Go practice on a demo. Go practice on a demo. Go practice on a demo. And same thing with Lightspeed. If you want to trade stocks, Lightspeed has a demo. I think the demo is like 2 weeks. And just go practice and learn. It's going to take time, right? So if you want, I'll put them in the chat for you guys right now. For some of you, if you want to trade stocks, right? To me, Lightspeed is the best platform to use to trade, and they have really, really good technology, good infrastructure, good commissions. When I used to trade at a prop firm, I used to use the Lightspeed. Really, really good. Professional people. The only problem is the pattern day trade rule. Paste. Right there. Trading crypto, guys, I wouldn't mess with trading crypto. Trying to trade crypto, that's for pros. Many of these exchanges, they're designed to take your crypto. Raise Realm, Eli. Were you able to analyze Asia Hall's story on Godfrey's podcast? No, but I'll do it right now. Tonight I'll start it. So let's open it up. So I'll pause that there, and I'll take a look at it. You have my word, Raise Realm. I'll write it down now. The same thing I did for Real Talk. Let me write it down now, and I'll start looking into it. And depending on what I'll find, I'll let you know if I find anything worth making a video about. So let me write this down and put it in my notes. But again, trading Bitcoin, I would not mess with it at all. But you have my word, Raise Realm. I'll look into it, and I'll let you know what I think about it. And if it's worthy of a video, I'll let you know. But yeah, like Bybit, a lot of these BitMEX, do not mess with those exchanges trading on leverage. It's designed to take your Bitcoin, guys. It's designed 100% to take your Bitcoin. I would not mess with that stuff, at all. Again, dollar cost average. Know what you're buying. Know why you're buying, and know why you're holding. Get a ledger. I've broken down how you can download the Bitcoin Core wallet. I showed you how you can get your private keys through the console. I showed you how to run a full node. As far as Ninja Trader is concerned, Ninja Trader is for futures. So I put Lightspeed in there. Let me show you guys for future. I recommend trading futures, especially for new people. You can open up an account with $500. It doesn't cost a lot of money. So let me copy this. And again, like I said, take your time, play with things. There's demos. This is free. Guys, free. I give you information free. Free. Bitcoin Connect is great. I heard there's no such thing as Bitcoin Connect. There was a Ponzi scheme named BitConnect that had nothing to do with Bitcoin at all. So I don't, BitConnect was a Ponzi scheme that had nothing to do with Bitcoin. Bitcoin IRAs. I don't believe that there's a Bitcoin IRA. I don't believe that it's regulated that you can put it in an IRA, but I'll look into that too. I remember you asked me that before. I forgot about it, but I'll look into it. What do you think about the government saying that they won't give every American $1,000 per month? They are. They're going to do helicopter money soon. They're going to like Mark J said. They're going to do helicopter money. Guys, they're going to print trillions and trillions of dollars, trillions and trillions of dollars. BitConnect was just woof. I mean, in BitConnect we trust. A lot of people got burned in BitConnect. You know what? I'll end it with that. I'll put that on now. Let's save this. Because a lot of people probably don't know what BitConnect is, so let me put that on for you guys. Some people don't know what BitConnect. I think that would be funny. That would be a good way to laugh. I think this would be funny. A lot of you probably would laugh. So let's put that on. I think that'd be a good way to end this. We'll put on the BitConnect guy.
Hey, hey, hey. Hey, hey, hey. Hey, hey, hey. What's up, Hey, everybody. My name is Carlos Matos, and I am coming from New York City, New York. Let me tell you guys that I am so excited. I am so happy. I am really so thrilled to be right now sharing this amazing, glorious, super and exciting moment of my life with all of you guys. And let me tell you that we are really changing the world as we know it. The world is not anymore the way it used to be. No. Be connected. Wow! Be connected! We are coming, and we are coming in waves. We are starting, and we are going to actually go all over the world. We are belting the entire world. Let me tell you guys that I started 137 days ago with only $25,610, and right now I am reaching $140,000. Whoa, what's that? And let me tell you that I am actually earning around $1,400 on an everyday basis, 7 days a week. What? I am right now independently, financially independently. I am saying to so many people who said that this was going to be a con artist game, that this was going to be a scammer game. Hey, you're going to lose all your money. My wife still doesn't believe in me. I'm telling him, but honey, listen, this is real. No. That's a scam. And I said, but wait, I'm going to go to the bank. I'm going to get my Bitcoins. I'm going to actually put it into dollars. Here, they're right on the table. No, that's money that you took from another account. I'll say, what am I going to do? Then I said to myself, you know what? When I started to put $10,000 a day on her, right on her, on her table, then she's going to say, whoa! Yeah, okay, that's real. So guys, I I want to tell you something. Faith and belief is the one thing that we all need to be able to change the world. And right now, I believe that in this room, we have the seed that's going to germinate and it's going to explode into an amazing opportunity for us to change this entire world. I am so proud, I am so honored, I am so excited to be here right now. And let me tell you something, that each and every one of you has the opportunity to become like those amazing people that we know here from Vietnam. Hey, my people from Vietnam, making so much money that they can probably have a real hard time counting it. So guys, let me tell you, I love Big Connect!
Yes! I mean, yo. I mean, you should have known that was a scam from the very, very beginning. Yo, I mean, the things that you see on the internet, the stuff that people fall for is just like, yo. And I mean, people made so many remixes to it. Like they remixed it so many times. Like it was so funny. I spelled it wrong too. I would encourage you guys to, like, if you want to watch it. Like there's so many there's like so many memes people made about the BitConnect guy, like for good. Like, yeah, he's like Umar for good. The stuff you see on the internet, man. It's just, and guys, like the video. There's 227 of you liking it. I mean, there's so many scams and schemes on the internet that just make you laugh, man. You just have to just, shake your head right now. It's just at some point, man, people have to wake up. That's why I laugh when people call me a scammer. Like, what am I selling? I'm not selling anything. I'm just telling you guys what I do with my money, sharing information with you. Mamacita O'Shea, King Kong, Scam Us, Big Connect, random donations. BitConnect. Wow. He took the VidSham. Wow. Sounds like an MLM. 100%. I've been burned in some MLMs. He got arrested in India. Flavor Flav for good. No operator in frozen produce. What a moron for good. Hispanic Umar Johnson. Lord have mercy. Classical snake oil salesman. Yeah, this dude is awesome. A sucker is born every 15 seconds. I agree. I'm about to start a business. Time to go. Ashe. My own wife doesn't even believe in me. No. Yeah, guys, it's funny. The stuff we see is funny. So, but I'm going to leave it here, guys. Great build. We're coming up on 102 minutes. I've seen the shockumentary. I was on Lennon's podcast the other night, Taylor. But I'm going to leave it here, guys. Please like the video. Share the video. We're going to be live every day this week at 7:30 p.m. So I'll see you guys tomorrow at 7:30. Hit subscribe. Hit the notification bell. Put it on all. Please join my mailing list so that you can be notified. Also, you can follow me on Instagram. My Instagram is in the description below. If you want to financially support, my PayPal and my Cash App is in the link. And also, drop a comment below. And with that, guys, I've broken down to you exactly what we can expect. History doesn't repeat itself, but it damn sure rhymes. Have a blessed and beautiful night, and I'll see you tomorrow at 7:30 p.m. Eastern Time.